For anyone who's not a carryover from the previous sessions, I'm Matthew Getz, co-founder and CEO of Block Tower Capital. We are a crypto asset, digital asset investment firm. So we have a fund and we invest, trade in cryptocurrencies and derivatives thereof and kind of everything in between. Joined by Hunter and Bobby. This should be a terrific panel. Folks who have been in the space for a long time really understand the ins and outs of the industry, the markets, the tools, the things that are needed. Peter, can you hear us now?
I can hear you. Can you hear me?
Yeah. All right.
Fantastic.
I just gave you a glowing introduction. Don't worry. We everyone thinks you're the best.
Appreciate it.
Just kidding. So we're joined by Peter as well. So Hunter, Bobby, and Peter have been around the space for a long time. A really good kind of combination of voices to help demystify and talk about a lot of the interesting angles around crypto as it relates to trading, as it relates to data, liquidity, market structure, and other things. I'm a big fan of people kind of talking a little bit about themselves, their background, and kind of what their focus area is in that part of the world. So why don't we do that with each of you as a quick introduction? We can go in the order on my screen, which is Hunter, then Bobby, then Peter.
Great. Thanks, Matthew. Hunter Merkhart. I run the U.S. business for Bitstamp. We traditionally were and are the largest European-based exchange. We are now making a push into the U.S. Here, my background, I was in traditional finance for a number of years, most recently at Barclays as in equities, trader background, and have now been in crypto for going on almost 4 years. Started my career in crypto at Coinbase, was head of trading there before joining Bitstamp in April 2019, which coincided with our Bit license here in the US.
Great. Bobby.
I'm Bobby Cho. I'm a partner at CMS. CMS is a principally funded and managed investment and trading vehicle in the crypto space. We manage as partner capital. And I first started off at a company called Second Market, which became Digital Currency Group. And it was there in 2013 that I met my partners, Dan Matuszewski and Julian Seguin, who most recently they were at Circle. But we were looking for people to trade with. And this is 2013 when you're going through bulletin boards and forums. And lo and behold, we came across Dan and Bay Hill Capital, which was a hedge fund trading space. And so we invest in different companies. We are in the market every single day trading. So you can look at us as effectively like a hedge fund, except we just don't manage any outside.
Peter.
And hey, everyone. Peter Johnson. I lead fintech and crypto investing for Jump Capital. We're a Chicago-based venture capital fund, currently investing out of our sixth fund. It's a $200 million fund. Typical investment for us is $3 to $10 million in a Series A or Series B company. We invest across fintech, IT and data infrastructure, B2B SaaS, and media-related companies. I lead our fintech and crypto investments. Have been doing that for the last 7.5 or so years. We are unique in that the capital that we invest comes exclusively from the owners and employees of Jump Trading. Jump Trading is a very large, very successful proprietary quantitative trading firm, 750 plus people around the globe, one of the largest traders in the world in many markets. So I work closely with them on our capital markets and crypto-related investments. We've made over a dozen crypto-related investments, investors in companies like BitGo, Curve, Digital Assets Data, Bitso, a lot of exchanges, custody providers, that type of financial infrastructure, I would say, is where we do the most of our investing, which makes a lot of sense given our connection with the trading firm.
And Peter, are you in Chicago now? We already did a geography check earlier. Are you in Chicago?
I am in Chicago.
Okay. Well, welcome, guys. Excited to chat for a few minutes. Why don't we start with the kind of like taxonomy of the space for those? So I think in the audience we've got crypto people, but we also have a lot of non-crypto people. So think of them as professional investors and institutions who are interested and curious about the space. How would you map out? And Hunter, maybe you have good perspective to start on this. Kind of the taxonomy of liquidity in cryptocurrency. You've got exchanges, you've got OTC desks. You've got different approaches to exchanges and places and venues where people can trade, as you kind of alluded to in your opening. Paint the picture for the audience, and let's use that as a jump-off point.
Yeah, I think crypto market structure and the evolution of the market is pretty fascinating. I really love talking about it because I think one of the former panelists kind of alluded to it. It's kind of unlike any other asset class at this point, and it's kind of grown up a little bit different in the way that it was originally driven, I think, mostly by retail rather than institutional. And I think that's, in some ways, how the market structures evolved from there, and the taxonomy is because of that. So, at one end of the spectrum, you have lit market exchanges like a Bitstamp, like a Coinbase, for example, that were some of the first places to go out and trade crypto. And within those, you have what you would call regulated and unregulated exchanges. Regulated, and I think would categorize most of the US-based exchanges, some of the European exchanges, and then you have some unregulated where they have either geo-fenced some market segments of their client base along geographic lines. At the other end of the spectrum, I think you have OTC players, which traditionally have been high touch. Pick up the phone, go on Telegram, go on a Skype chat, try and get liquidity that way. And I think that's how, a lot of institutional clients first came to the space because, trying to sign into an exchange, trade through a web-based user interface was not exactly what most institutional clients were used to, especially if, they were coming from a wealth management background or a traditional finance background where they were dealing with sell-side trading desks. And then I think what you've seen the emergence of, and maybe Peter can talk about some of this, is you have liquidity providers that have been providing liquidity in traditional asset classes, usually principally, and they are now, I think, entering the space through electronic RFQ platforms or, plugging into systems like a Tagomi, smart order routers. And I think that's another platform and venue for people in the space to get liquidity. So that's kind of how I view an overview of liquidity in the space. Bobby or Peter, feel free to jump in.
I think, Hunter, you're exactly right in terms of the retail nature of it. So I think it's important for people who are looking at the space that's where this came from. So when you look at products in the space, when you look at different platforms, they all have a retail angle to it because that's predominantly who the consumers are. I think a lot of people forget that one of the biggest exchanges, obviously before it got hacked, was Mt. Gox. Mt. Gox actually started in Costa Rica as this retail exchange, and then it got sold to Mark, who obviously moved it to Japan. And so I think once you have that lens, when you look at this marketplace, stuff starts to make a little bit more sense. I think it becomes a little bit harder when you come from the institutional world and you worked in kind of this kind of very rigid structure of framework that crypto seems confusing. And so I think that's one of the bigger takeaways is the average profile of the person that's trading in these markets, looking at this stuff is generally retail.
And I think this is an interesting panel because we've got a nice blend of, a provider, right, in Hunter, a consumer and trader in Bobby, and long-term investing in some of the activity that Bobby does, as well as you, Peter, from kind of the VC investment perspective. So as you think about investing in what the future of this infrastructure looks like, what kind of themes are most attractive to you? Are you thinking about, the institutionalization of the space in contrast to the picture Bobby just painted? Are you looking to deploy capital to support kind of that long-term, more mature infrastructure? And do you think a lot of that needs to get built? Do you think it's an extension of existing players who are in the process of building it? What's your sort of thesis?
Yeah, so the financial infrastructure is the place that we invest a lot, and that the infrastructure has come a long way over the last few years. If you look back a few years, kind of what was the financial infrastructure in crypto? It's basically exchanges were an amalgamation of everything that you needed to trade. They were the broker, they were the exchange, they were the custody provider, they were the settlement agent. Everything was in these one players that was the full financial infrastructure, just because there wasn't any other players in this space. There was no prime brokerage, no leverage, et cetera, those things that you're now seeing coming into the market. And from a trading point of view, it used to be kind of very immature, kind of manual OTC, Skype type trading that has very quickly evolved to be a very electronic driven now. So as we think of kind of where we're investing from a financial infrastructure perspective, we've already invested in a lot of the somewhat obvious places. If you look at custody providers, data providers, I would say lending is a place that we haven't necessarily invested, but that's obviously coming up big. You've seen the big prime brokerage announcements. We are investors in BitGo, which is going into that space in a big way, along with others like Coinbase and Genesis. I would say the biggest thing that we're actually looking at right now is how do we get this financial infrastructure in places outside the US? Because if you believe that crypto is going to be what we believe it's going to be, which is one, a digital gold-like asset, but also new rails that change how money moves around the world, you're going to need infrastructure to get in and out of fiat currencies around the world. So that's a lot of the work that we've been doing, or partnering with companies like Bitso in Mexico and BitOasis in the Middle East and other exchanges around the world. To how do we partner with them, enable this to become kind of money movement rails and provide liquidity, which is one of the things that they really need and we can bring from the trading side of the business.
Yeah, definitely. So let's keep on this topic for a little bit. And Hunter, you alluded to this, but the different kinds of approaches that, for example, exchange operators or derivatives platforms, et cetera, are taking. And it dovetails with the topic of regulation. And in our prep, you mentioned this, and I think it's a really important topic because you kind of almost see a bifurcation of two different business models, where some are taking the more regulated approach and some are taking the more unregulated approach. And these can involve different legal jurisdictions, different regulatory regimes. What does that look like? Who seems to be winning? Is this a kind of long-term greedy game in terms of how this plays out and how you think the market will consolidate? Or do you think it'll be different from kind of the model we've seen play out in traditional markets?
I think there's definitely going to be consolidation. I think M&A is going to play a part in this space soon. I think in terms of the bifurcation of the market, I find it pretty fascinating how some of these derivative platforms have bootstrapped themselves. And I think it proves out the need for these derivative markets in crypto that we've been talking about for years. It's now here. You can get real liquidity. I think the nature of that too is interesting in crypto because the pre-funded nature of retail crypto exchanges has been really hard for institutions to get comfortable with. And I think derivatives platforms and products, especially some of the quote unregulated ones overseas, have figured that out with kind of the 100x leverage products, perpetual swaps. They're fascinating financial derivative products, and I think they solve some of those problems for some institutions. The question I think that's going to be interesting over the next couple of years is whether the higher quality, I guess, more institutional players coming to the space, if they're comfortable with some of that counterparty risk, being that there's no central clearer, there's no, similar to in the US, CME or CBOE type platform that, in other asset classes and commodities where you kind of have a central clearing party you're just facing off against an unregulated platform overseas. So I think that's going to be interesting as the space evolves. I could see some of those unregulated platforms starting to embrace regulation to cater to more institutional players.
Bobby, what's your view? I think you have an interesting perspective because you've kind of been on a couple different sides of the crypto world as a trader, as an investor over the last several years. You've been around it for longer than most, and now as kind of this prop investor trader. What do you guys look for? How do you think about the evolution of what?
Yeah, so when we first got started, which was October of last year, we understood the trading world pretty well, and then it was kind of trying to understand like this investment world where breaking into that deal flow or kind of where things were happening. So a lot of that deal flow actually was originating out of Asia, and the deal flow here in the U.S. was just it had either dried up or had kind of hit these regulatory roadblocks. Europe, there just generally was not as much activity as the US or in Asia. And so our focus quickly became Asia. That's where most of our contacts are and where we're looking at. And so the first objective was, can we kind of break into deal flow? And then what types of projects are we going to start investing in? It just became natural that we started to invest in both centralized and decentralized exchanges in this space because, one, we could leverage our previous experience to obviously assist in the build out of some of these products. Obviously, two, we invest in these products. And lastly, we become customers of these exchanges to the extent that we're able to become customers. And so that's kind of where our focus has been still on, as Peter mentioned, financial infrastructure. that's kind of where we've been playing a part in terms of where we've been investing our dollars, mainly because I think everybody would agree that, the exchange space in general is kind of like a big king of the hill. Everybody is trying to edge one another out, whether it's fees, product offering, or just anything that, the VC money can basically get them. And so we continue to look at that space. We think it's interesting because there just is no one clear winner that you can say, hey, you know what? In 5 years from now, that exchange is going to continue to exist, and that will be the clear market share leader. I think finance has done a good job, but as history has shown us, with the likes of other exchanges like Mt. Gox, Bitfinex, Bitstamp, and other folks, it is a very challenging environment to try to compete in every single day. So folks like Hunter and other folks at exchanges have a very difficult task because both the regulatory game continues to change underneath you every single day, but also consumer sentiment changes as well. So how can you, especially when you get as big as Bitstamp is or as big as other exchanges are, how do you maneuver quick enough that you can edge competitors and stuff like that? So I just think it's a really fascinating dynamic, the whole financial infrastructure side of the crypto space.
Yeah, I really hear you, and we think a lot about that as well with regard to the global nature, which I'm glad Bobby brought up of this space, particularly with Asia. We spend a lot of time there as investors with what we do. And Peter, I should have asked you this, and sorry if you mentioned it, but you mentioned financial infrastructure and its importance, which I think we all agree on. Are you looking mostly at those deals, those things that you're funding in the U.S., outside the U.S., a combination of the two? How are you kind of focused?
Yeah, definitely a combination of the two. So we have a lot of investments in the U.S. Our more recent investments, a lot of them have been outside the U.S. So that's probably where we see the most opportunity right now, is things outside of the U.S. in Asia, in Latin America, in a number of regions around the world where there is, they are behind the U.S. as far as building that financial infrastructure, and we feel that we can add a lot of value both as an investor and on the trading side.
Yeah, I like that, and I agree with it. One of the terms that Hunter threw out when we were prepping for this was increasing the velocity of crypto trading, and really it all comes down to liquidity. I want to spend a couple minutes for the audience on this topic, whether it's new tools. We can clarify what some of these things mean, but the SEN network, things like Fireblocks, there's other service providers involved here. There's been somewhat of a race to become the kind of air quote prime broker of the space, really focused on liquidity around a very fragmented liquidity picture for the industry that often accrues, to very, big and specific pockets at specific times. So we can also pivot this then into a conversation around counterparty risk, which is near and dear to my heart. But Hunter, what kind of tools, platforms are you seeing that are helping to address this issue of fragmented liquidity, fragmented market structure in the industry, and what are you guys focused on in this regard?
Like you had just talked about, we've partnered with Silvergate. We've also partnered with Signature Bank. We just announced a partnership with Fireblocks. And the goal for all of those is, it's traditionally been pretty slow to move both fiat and crypto in the space. Silvergate and Signature, with kind of their proprietary networks, has enabled it to move fiat instantaneously and also settle instantaneously, which helps around the pre-funded nature, especially from an exchange perspective. And I think Bobby can talk about that.
Can we just quickly tell the audience what those systems are doing? So they have a picture.
Yeah.
In case folks aren't familiar.
Silvergate, I think, is probably the SEN network is the original one, where essentially if you have a bank account with Silvergate Bank, and you have a counterparty that has a bank account with Silvergate Bank, instead of having originally to do wire transfers and doing those between U.S. banking hours and waiting for settlement, you now have a proprietary network that Silvergate built out, where any client of Silvergate can immediately transfer fiat between each counterparty, and without having to wait for the traditional banking rails to settle those funds. So we've joked about it internally, where it's almost faster now to move fiat than wait for Bitcoin blockchain confirmations, which can take as long 10 to 15 minutes. So I think, does that kind of explain, Matthew, in terms of, yeah. And again, Signature just built out a new network called Signet that's very, very similar for their banking clients to compete there. I think Prime Trust has one. And then on the other end of it, Fireblocks is kind of coming at it from a crypto first perspective, where they are trying to speed up the transaction times for crypto. So instead of waiting 10 to 15 minutes for a transaction to get confirmed by the Bitcoin or any other blockchain, you now can do something with Fireblocks in one confirmation. And it's almost acting again in some of a, you can almost look at it as like a prime brokerage model in some ways, where they're acting as kind of that counterparty to confirm, and you're putting trust in them. But it does, at the end of the day, people are looking to speed up these transactions from a trader perspective to increase liquidity and take advantage of, you know, trading opportunities to generate alpha. And I think a lot of these tools are trying to solve for that.
Bobby, Peter, anything you guys want to add to kind of this topic?
I guess I'll just say that you know, what crypto has conditioned people to think is that everything should be instant, near free, and immediate. And so I think people grew like very frustrated at like, well, why isn't the money showing up, you know, yesterday? Well, it's because that goes on traditional rails. And so the crypto space has actually created very innovative, I don't even like products, I would say, but also even incumbent banks that have been in the traditional side for a long time, different wrappers to make, you know, cash movement seem different. And so I think that'll continue to happen. Look, I don't think any of the current service providers that are out there in the space today will look the same a year from now. You know, you're seeing it with different custody solutions. I think Peter had mentioned about, you know, BitGo offering some more different types of solutions, because again, I think, you know, there are more innovative stuff happening in the actual, you know, protocol layer with some of these projects that's influencing the decision making of a lot of these companies. So, for example, if you were let's say a prime broker 2 years ago, maybe you were looking at lending. You know, you're definitely looking at custody, but were you looking at staking at all? I mean, that's a question we ask whenever we're looking at different things. Is like, hey, we want the full diner menu. Do you guys offer it? Whereas newer companies will come out and continue to kind of push that envelope, which I'm sure is some of the deals that, you know, Peter, Matt, and myself look at.
Yeah, we've come from such a capital inefficient place where, you know, pre-funding plus kind of slow movement of dollars mainly, to now having Silvergate and Signature are such important infrastructure in the industry that, you know, every major player is using them to move money around. I think the next step of this is where we're quickly going is how do you integrate the crypto side of that? You know, folks like, you know, like a BitGo and others, where they will move the crypto and the fiat at the same time. So there isn't one side lagging the other. You don't have to think about who's sending first. And then it's adding on more currencies, because when you think about large trading firms, they're not just trading USD. They're also, you know, they want to trade euros and pounds and you know, INR, MXN. Like you name it. This is a global game. So how do you integrate all the fiat currencies along with cryptocurrencies and be able to kind of move those all instantly? That's how you get real velocity that traders are looking for.
We talked a lot about on the last panel related to custody, kind of institutionalization and incumbents and traditional firms getting into that space, which strikes me as potentially a little more difficult. They can always buy it rather than build it, I suppose. Here, and since we're on the topic of banking, Peter, you mentioned before the other day about kind of just challenges with banking. What angle are you seeing that from? What angle are all three of you seeing that from? So we've mentioned now a couple times Silvergate and Signature, which are the two, I think, two of the more well-known, reputable banks here in the US that bank crypto companies, that work with firms like mine, probably some of your guys, around facilitating our businesses. What is that? But that's still just like two, right? There's a lot of banks, and what's the general trend you're seeing both in the US and outside the US? I think there was a headline a few weeks ago of JP Morgan starting to accept banking accounts for crypto companies and things like that. I don't know who all they're working with yet, but what's your guys' sense of where that's going? Is it moving along as fast as we would hope it would be, or do we see it as a potential kind of risk?
It's moving along. In the US, it's great to see JP Morgan banking major crypto companies. It is still probably the biggest challenge that I see internationally. is getting bank accounts in these various countries for exchanges, brokerages, major players, trading firms. So how do you solve that? I think that is it's banks getting more comfortable banking crypto firms, which that is slowly happening. And I also think that there is an opportunity for companies to come in and provide a layer that abstracts away from the banks and the crypto companies, and then plugs into many banks, serves the crypto companies, and that's way if one bank decides to turn it off, they're still connected with a variety of other banks. You're seeing that with some companies like BCB is doing that to some extent. You've seen another number of others kind of start to pop up and look at that. But I think that is a real opportunity for these kind of neo-banking providers to fill in while the banks take their time to get comfortable.
Yeah, I mean, I think it's still, as Peter mentioned, it's still challenging today. I remember, so I had left Second Market DCG because I had this feeling that the infrastructure just wasn't there. Lo and behold, I was way too wrong about that early. But so I went to a company called, which is called Paxos now, which runs an exchange called ItBit, and we had just finalized, I think, our Series A. We had 20 million in the bank, and I had called 200 banks to try to get a bank account. Of course, they take my call because we had just raised a bunch of money, and that was part of my pitch. But I quickly realized what some of the issues were. Mainly around, obviously, there's no Fed guidance on this stuff, so none of the banks wanted to risk any of their charters. They didn't know how to monitor some of these high-risk companies which were in the crypto space. And so when Silvergate came online, I mean, that was a huge kind of release valve for a lot of companies that were obviously doing things the right way. They were KYCing people, maybe they're doing chain analysis stuff. And then Barclays came along and they invested in chain analysis, and they were able to have a view into what was actually happening. So I think the space has definitely loosened up quite a bit from where we've come from. But I think the big pivotal thing is, Matt, you mentioned about JP Morgan, which I think it was Coinbase and Gemini that they're banking, which I assumed naively that, hey, this is corporate banking. They're probably gonna do some payroll out of it and stuff like that. But no, it was for their exchange deposits, which in my mind, that's a huge deal because that's an omnibus account for benefit of other clients that they manage. That's not just like opening up a single account for just corporate reasons. So they had to, I'm sure, go through layers and layers of due diligence, but definitely feels like the banks are waking up to that. But the important, I think, thing with JP Morgan is now you have a tie-in with the SWIFT network, which the crypto space didn't really have before, because you always had these regional banks, even Silvergate, Signature, and those folks. They were still for international wires hitting the SWIFT network, and then from there you're dealing with 30 banks or so that effectively make up SWIFT. And so either way, you're getting close to the solution. But now this JP Morgan thing, I think, is pretty powerful.
Yeah, and I think I would just add from the exchange perspective, being Bitstamp, longest standing exchange, we have a lot of scar tissue associated with banking relationships over the years. I think we still have around 30 banking relationships. Obviously, Europe and the different regulatory regimes there. It is I think part of our secret sauce in terms of trying to figure out how to cater towards all our clients. But I think the goal now with JP Morgan is to constantly try and level up those banking relationships. The way I look at the JP Morgan announcement, maybe I'm a little cynical, is there's just too much money in the space now for them to ignore it. And if they want to take a Coinbase or somebody else or a Bitstamp to IPO at some point, they have to be open to banking them. And so I think there's some of that as M&A and IPOs start to heat up in this space, which I think we'll see in the next year or two. I'm not surprised that they want to bank them too, but I also think it's a way for them to generate more fees from a banking perspective.
Totally agree there. A couple other topics I want to get to as we kind of head towards 7. And if you've got questions in the audience, feel free to post them in the Slack or in the chat. One of them that came through relates to decentralized lending, decentralized exchange protocols. We talked a lot about decentralized finance on my previous panel with the custody folks who think that's pretty important. So curious, Hunter, from your perspective, is DeFi, decentralized finance, decentralized exchanges, decentralized lending, is that something that you guys are thinking about yourselves? Is it something you're kind of keeping your eyes on in the industry? Do you view it as competitive, or do you think there's some timeline on when it becomes competitive with what you're doing? And then Bobby, maybe from a mixture of perspectives, are you using it at all to trade, to affect transactions? And then secondly, maybe more relevantly, are you funding it? Are you looking at funding projects in the DeFi space? And same question for you, Peter, as you think about kind of the future of it. Obviously, DeFi has gotten a lot of attention from a number of folks in the VC community. I'm curious how you guys are focused on it. I haven't talked to you guys about it explicitly before. So Hunter, let's start with you and go.
I think we're watching it. I think, we're interested. I would say I still think it's very early, especially for institutional players to fully get involved. I think there's still latency issues, but at the same time, if you can generate alpha there, people will show up and people will trade if there's an opportunity.